Hi, I'm James Robinson, and this is my stock pick of the week. This week, we're going to talk about a company called Oil-Dri, symbol ODC. When I find a stock that I think is worthy of investing in at a good price, I always do a 5-part video series on the company. Those 5 parts are an overview of the company, this is the overview for ODC. I do one on the operations, which is a look at how good a job the company does delivering goods and services to the customer. One on the balance sheet, which is really the risk associated with owning the company. Is there debt, which could pose a problem to the company? One on dividends, and one on wealth creation, which is how good a job the management has done over time in creating wealth for the shareholders. So generally looking at the company Oil-Dri, this is as of October 16th, 2020, which is when I bought my position in the company. It has a market cap of $254 million, so it's a small, very small company. Revenues of $283 million, profits of $18.9 million. The PE ratio is 13.89, so relatively low PE. Its yield is 2.98, so the dividend is kind of twice the market average. Its long-term debt's about $18 million, so virtually no debt to speak of. So that's sort of just the fundamentals about the company. Now let's talk about what the company does. It's a really interesting business. Oil-Dri is a really interesting company, and it's one of those companies that you would never find if you just look at the S&P 500 because it doesn't reach the size of that sort of company. It's a very niche little business. It's in an industry that, again, nobody's really competing for. And so I think it's one of those neat little, Warren Buffett type companies with a good consumer monopoly. So let's talk about them. Oil-Dri makes products out of sorbent clay. Now, sorbent clay is clay which has absorbent capabilities. And sorbent clay is, the word sorbent means that it's something which will absorb either gases or liquids. In this case, it tends to be liquids. It's primarily used in garages, so they're put on the floor of a garage to soak up any oil that might spill. It's also used for kitty litter. They've got a big business doing kitty litter. And they use it in agriculture to collect excess water, I suppose. And they use it for sports fields. So when you look at a baseball field, the top covering will be the sorbent clay, and that way when it rains or when they're watering the field, it won't get muddy or dirty, and they'll be able to continue to play longer. They also make kind of a really niche little business. They make pitching mounds, and apparently there's, between every Little League field in America and every high school field in America and every big league field in America and all the AAA fields, there's a requirement for pitching mounds, and there's a lot of them around the country, and these guys are sort of the go-to guys for that. So it's kind of this really niche little business that I really like when I'm investing. It's interesting. They're basically they are a vertical monopoly. They control the land where the clay comes from. They own 8,000 acres of land debt-free, and they lease another 4,000 acres of land, and then they control the production where they take the clay and they manufacture it into kitty litter or whatever else they're making out of it. And then they sell the product direct to the public then they sell the finished product to the retailers. So they control the entire business model. And again, so it's interesting. So basically at the fundamental stage, they're both a mining company and they're a producer of consumer goods. And as a mining company, they have about a 40-year proven supply of clay. So their 8,000 acres that they own free and clear will produce enough clay for their current customer base for the next 40 years. So they're good forever. Basically, for our purposes, they're good forever. What's also interesting is that they tend to, every couple of years, acquire enough new land with this same kind of unique clay, which has these chemical properties that we don't need to get into. And that new land replenishes what they've done in the last few years. And it's interesting because most people might have a field, a 10,000 acre parcel or 1,000 acre parcel, whatever, that has this clay. They don't even know they have it. They don't know it exists. When Oil-Dri comes in to buy this land, they're not buying it from people who know what they have. They're buying it from people who think they have a field and who knows what the value is. But these guys are able to determine up front, hey, this has got the clay we need, and it's worth more to them than it is to anybody else. In theory, at some point in time, they're going to be able to sell this excess land when they use it all up and sell it to farmers or whoever. So, they're buying it cheap. They're going to sell it in 30 or 40 years. Inflation's going to have made it worth more. so that, you know, they're really creating a nice little land bank for investors as well. So the company's products include a bunch of companies you probably never heard of, but they make Cat's Pride, they make Fresh and Light, they make Johnny Cat, Kit Kat. If you've got a cat, I'm sure those are names that you'll recognize. And their other products are household names. You know, Pro Mound is the one that makes the pitching mounds, and that's a household name in the baseball industry for baseball greenskeepers or landscapers. It's based out of Chicago, Illinois. They have 800 employees. Only 50 of those employees are unionized, so that's good. The company's about 80 years old. They've managed to raise their dividend for 17 straight years. So it's kind of a neat little niche business that you'd never really think of and say, well, who owns Johnny Cat? But it's one of the things that I've stumbled on as part of my research, and it has become now cheap enough after watching it for quite a while that I'm suggesting you should buy it. So I always include this slide because I'm trying to grow the site like everybody else. We put a lot of time and effort and energy into doing the research for these stocks and trying to find these companies. And one of the real quandaries that I have is if I did nothing but Fortune 500 companies and I researched nothing but household names like Raytheon and Apple, I'd have a lot more viewers. Probably I get 4 or 5 times as many views when I do those big companies as when I do small companies. The problem is that I don't think they are as solid an investment. I don't think they represent the best opportunity to make money. And so I feel like by making the choice to give you guys the best investment opportunities I can, I'm kind of hampering the site's ability to grow. So in exchange for doing that, which I continue to do, I'd appreciate it if you take a second and subscribe if you like the videos. Supposedly, if you comment, that creates a better hits rates on the algorithm, which allows me to grow the page. And so, by way of a comment, I've just asked people, tell me where you're writing from, and then I will put a dot on the map that shows you where, shows people where my followers are. I kind of really like to see that I've got followers from all over the world. It makes me feel good. But at the end of the day, if you like the videos, especially if you've made any money off the videos, and if you've bought virtually any stock I've told you to buy, you have made money because most of my investments have done pretty well, then just do me a solid. Just hit the like button, hit the subscribe button, and by the way, also, you'll get better results if you follow me on Twitter, because I put down, as soon as I buy a stock, I put it on Twitter. As soon as I sell a stock, I put it on Twitter, but it takes me a few days to get the video made. So my Twitter handle is @RobinsonStocks, and you'll find information there that is more timely than the information that you find on these videos. So this is the analysis that I always do on a company. I grade companies on a grade in 29 categories, 9 of which measure operating, 10 of which measure financial, and 10 of which measure management. And financial is, how much debt and therefore how much risk the company has, and how much they're able to return money to the shareholders. Operating is what kind of job the company does in delivering goods and services to the customer, how efficiently they're able to do that. And management is how much wealth the company is creating for the shareholders through stock buybacks, dividends, paying down debt, et cetera, et cetera. So I grade everything on a scale of 1 to 4. You can see here that that this company is kind of just slightly above average in terms of operating. That's because they're a mining business, right? The portion of the business that is used in mining is a commodity business, and those businesses don't measure up very well with what us value investors are looking for. However, they're an integrated monopoly, a vertical monopoly, and so they're able to get economies in the other aspects of the business that make them do a really good job in terms of returning wealth to shareholders, and they do an excellent job in terms of financials because they have no debt. And in fact, their book value is almost certainly understated because they have all this land that one day they're going to be able to sell because they'll have depleted the clay out of it. And it's being carried on the books at the purchase price, not the current value. And without getting into all the nuances, the company is almost certainly has tens of millions of dollars of land that's being carried on the books at very little cost. Plus the company's an operating deal, and plus the company continues to have no shortage of opportunity to find new land. So this company is a very good company, and it's very solid. The operations are a little bit less than I would like, but I think they have this great monopoly that no one else really wants to get into this industry or has the ability to get into this industry, and so they're in good shape. So that's it on the fundamentals for Oil-Dri Corporation. I think that it's a good long-term hold. It's a decent dividend play. They've raised their dividends for 17 years. Their operations are slightly above average. The management is excellent. The financial is pretty good. Good business, and but a really small business that most people will never have heard of or will never have thought of to invest in. And that's where I think we find great opportunities. So thank you very much for your time.